This video reviews Sumitomo Mitsui Financial Group's financial results for the first quarter of fiscal year 2026, covering the period from April to June 2025. SMFG, or Sumitomo Mitsui Financial Group, is a major Japanese financial holding company and one of the country's largest financial groups, competing with Mitsubishi UFJ Financial Group and Mizuho Financial Group. Financial highlights. Summary of the first quarter of fiscal year 2026, highlighting that both consolidated business profit and bottom line profit have progressed to 29% of the full year targets. The anticipated negative impact of 100 billion yen from U.S. tariffs has not yet occurred. The domestic retail segment benefited from deposit growth and higher interest income due to rising rates. Domestic wholesale loans for large corporations increased by 18% year-on-year, and fee income also rose. In the global business, income from loans and deposits grew thanks to ROE-focused operations and strong fee income. The Global Markets Division had a weak April due to market turmoil, but recovered from May. Overall net business profit rose by 75.5 billion yen year-on-year, despite losses from equity sales and the sale of Bank of East Asia shares, and a rise in credit costs that were still within the annual forecast. The progress rate stands at 29%, indicating that things are going smoothly so far. Income statement. Consolidated gross profit increased by 57.9 billion yen year-on-year, driven by stronger income from domestic loans and deposits, solid performance in the payment and consumer finance businesses, and higher fee income in the domestic wholesale segment. Despite cost pressures, overhead remained well managed. Equity gains rose due to insurance income and changes in affiliates. Credit costs increased, but stayed within expectations. Stock-related gains declined due to lower equity sales. As a result, ordinary profit fell, but net profit rose. Net interest income increased as a result of growth in domestic loans, better lending margins, and the impact of policy rate hikes. On the other hand, stock gains declined due to fewer equity sales and a loss from selling Bank of East Asia shares. Simulation of the impact of a rise in Japanese interest rates. SMFG estimates that a 25 basis point increase in both short-term and long-term interest rates could lead to an additional profit of approximately 100 billion yen. The total potential increase in profit due to rising interest rates could reach 200 billion yen, which includes 40 billion yen realized in the first quarter. As interest rates in Japan are expected to rise further, SMFG is likely to continue benefiting from favorable market conditions. Domestic loans and deposits. Domestic loan balances increased steadily, especially in large corporate loans from major deals, while large corporate spreads declined due to M and A-related bridge loans. Small and medium-sized companies and retail spreads were stable, and the overall domestic loan-to-deposit spread improved. Overseas loans and deposits. Overseas loan balances, particularly in the Americas, grew on strong funding demand. Loan spreads improved as SMFG continued to emphasize ROE, asset quality. While total claims and credit costs rose, non-performing loan ratios stayed manageable. Asset quality was preserved through continued risk management, even amid expanding loan volumes. SMFG continued reducing equity holdings, with 209 billion yen cut by fiscal year 26 first quarter, ahead of schedule. SMFG targets keeping equity risk below 20% of net assets and actively uses hedging strategies. As of March 2025, equity holdings were 29.2% of net assets. SMFG rebalanced its bond portfolio, responding to rising interest rates. Yen and foreign bonds were managed across varied maturities to stabilize interest income and control risk, reflecting a disciplined investment approach. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 3,855 yen as of July 31st. And the US dollar stock price is $15.14 as of July 31st. The stock price temporarily declined due to the shock from the Trump tariffs, but it has remained stable in recent months. Current PBR is 1.03 and PER is 11.4. Dividend yield is 3.53%. Compared to the past few years, the current stock price appears slightly overvalued in terms of PBR and PER. However, the dividend yield is higher than before. In particular, like many other Japanese companies, SMFG has continued to raise its dividends, keeping the dividend yield at a high level. Conclusion: the first quarter results of fiscal year 2026 showed solid progress toward full-year targets, with a 29% achievement rate for both business and net profits. Growth in domestic and overseas loans, rising interest income, and stable asset quality all contributed to the strong performance. With continued benefits from rising interest rates and a disciplined financial strategy, SMFG is well positioned for steady performance throughout the year.